Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the bearish scenario where we're looking for a bigger leading diagonal to the downside in a wave A or 1, then a retracement to the upside in a wave B or a wave 2, after which we expect continuation to the downside in a wave 3 or a wave C. The invalidation for this scenario is price moving above the high of wave 2 at 70.6k. In this scenario, we're looking for a 5-wave structure where all of the waves are 3-wave corrective structures. They all have to belong to the zigzag family. Inside wave 3, your common target area is between the 786 and the 886 trend-based fib extension, taken from the high to the low of 1 to the high of wave 2, giving you a target between 66.1k and 65.5k. A minimum target for wave 3 is taking the low of wave 1 at 66.2k, and preferably a maximum target is the 1-to-1 trend-based fib extension at 64.9k. If wave 3 does move below 64.9k, it does lower the probabilities for this scenario. After wave 3 is finished, we are looking for a wave 4 to the upside, a zigzag structure, preferably a wave A, B, C or a W, X, Y, overlapping with the price action of your wave 1, so moving above 66.3k, and then see one more leg to the downside in a wave 5. Inside your wave 3, you're then looking for a 3-wave structure in a wave A, wave B and a wave C, where the wave A in this case finishes at the lows here. You have a wave B to the upside, either already finished or a bit of a longer sideways range for B, and then you want to see a wave C to the downside. The bullish scenario is a 5-wave impulsive structure, where eventually after wave 4 is finished, we look for another leg to the upside in a wave 5. One of the targets is the 1.236 Fibonacci, taken from the start over here to the lowest point of your wave 4 at 73.3k, and the other one, the 0.618, is a trend-based fib extension, taken from the low to the high of 3 to the current lowest point here in your wave 4, 65.8k. Preferably wave 4 is finishing after the 1-to-1 fib time, taken from the start to the end of 2 to the end of your wave 3. You can see that the low here was made before the 1-to-1, so therefore preferably all of this price action here is still part of a range in wave 4, after which we look for a wave 5. But preferably though, this would be your low, as there's not a lot of room left till you hit the invalidation for this scenario at 66.5k. Because your wave 1 and your wave 3 are quite similar in length, it does give a little bit more probabilities to the potential of a wave 5 to be an extended structure, so a very long high volume impulse to the upside, where then your target is going to be the 1.618 at 91.3k. Inside wave 4, we are then looking for scenarios that can continue this range, after which we eventually expect price to move towards the upside. Here you can see we have a wave W, wave X and a wave Y count, but also a triangle in a wave A, B, C, D and a wave E. And I want to start with the triangle because in a triangle, all of the waves have to be zigzag family structures, and 4 out of the 5 waves have to be simple zigzags. Only one wave is allowed to be a more complex structure, and most commonly it is wave C or wave D, which then turns into a double or a triple zigzag. If we look at our wave C here and count this move to the downside as a 3-wave structure, either in an A, B, C or a W, X, Y, then what we can see is that the second leg to the downside here, either a wave C or a wave Y, did not touch the 0.618 trend-based fib extension, taken from the high to the low to the high over here, which is very rare that a wave C doesn't even hit the rare target for a wave C, and that a wave Y doesn't hit the common target. Still, the 0.618 is common for Y, but it missed out on hitting the 0.618, which is also very rare for a wave Y, which does lower the probabilities a bit for a triangle, because your wave C second leg here missed out on hitting the 0.618 trend-based fib extension. The invalidation for the triangle is price moving above the high of wave B at 70.6k, or move below the low here of wave C at 67k. If you then look at the WXY scenario, then for the WXY scenario, we already have a finished wave W, which is a zigzag in this particular case, a 3-wave structure, wave A, B, C to the downside, then we have a bigger 3-wave sideways move inside wave X and look for a retracement in wave Y. Inside wave X, we then start with another wave W here, then a flat structure in a wave X, and then a wave Y to the upside. Now a wave Y, because wave W is a zigzag, wave Y can only be one of two structures. Either a flat structure in an A, B, C, where you take the lows at 67.1k, or a triangle, which is a continuation of the range. After wave X is finished, we're then looking for a wave Y towards the downside. The most bullish scenario is a double 1-2, where we have a finished 1-2 in green, looking for a 3-4-5, and inside the green wave 3 we have the blue count 1, 2, 3, 4, 5. Now preferably your second wave 2 finished over here between the 05382, that's a fine target for a wave 2 as well, and this wave 2 is shorter in time than the wave 2 in green, which is what we prefer to see. This low over here was made before the 1-to-1 fib time, taken from the start to the end of 2 to the end over here of the blue 1, comparing the two wave 2s with one another. However, if this is your low over here, which now also of course is your invalidation, and you want to see bullish continuation to the upside, the only count that you can really have is counting this as a wave 1, wave 2, and we want to see continuation to the upside, right? So currently your wave 2 is already pretty lengthy. If we take a fib time from the start to the end of your wave 1, toggle on the wave 2 fib times, then you can see this low over here was made before the 3 fib time, which is perfectly fine. But if you move down once again and make a new low, you're going to get very close to the 4 fib time, or maybe even make a low after the 4 fib time, which significantly reduces probabilities for this to be a wave 2. Now the common target for 2 is the 618 to the 786, taken from the low to the high of 1, so that is perfectly fine. And if your low of 2 is in with the flat in an A, B, and then a wave C to the downside, and you look for price to move to the upside, then the structure to the upside is far from ideal. So if this is, on my chart actually, the low, and this is your 1, 2, 3, first of all your wave 2 hit the 886 here, which is a very rare target for wave 2. So if this is the end of your blue 2 and you look for again an impulsive structure to the upside, then wave 2 here hit the 886, which is very rare for a wave 2, not preferred. And on some charts I know this low got taken, so therefore I would prefer to actually put this wave 2 here, and then on my chart it's truncated. If this is the low of your 2 and we want to count impulsive structures to the upside, then this move here has to either be a impulse in a wave 1, 2, 3, 4 and a wave 5. It has to be a double 1-2, 1-2 continuation up, or a diagonal. Now if we look for this to be a diagonal, then you can see this would only be your wave 1, potential 2 or 2, and then you still need a 3, 4 and a 5. And I don't like to really think about diagonals until the wave 4 is in. Lower probabilities, as long as wave 4 is not in, the probabilities generally are higher for other structures. This then brings us to a double 1-2, where at the moment here this is then your wave 1, because you can't really have a 1-2, 1-2, 1-2 and a big 3, because we didn't get a big 3, right? You only get a small wave 3, and then this has to be your wave 4. But if this is your latest wave 2 and 4 overlap, not allowed in an impulsive structure, so that's not great. And then we have a simple impulse to the upside, 1, 2, 3, 4 and a wave 5, where here we have to find a wave 1, 2, 3, 4, 5. Now if you look at the volume, then what you can see is that the highest amount of volume is here, right? So this has to be your wave 3 in that case. And even if we do not count a diagonal here as a wave 1, so you would then have a wave 1, this is your small little 2, 3, 4, 5 overlap between your wave 1 and your wave 4, so that's an invalidation for this scenario. Even if we then would count this your wave 1, of course very awkward wave 1 over here in that case, and this is your wave 2, right, and then this is your 3, 4, 5, then still your wave 4 hit the 0.618 taken from the low to the high, which is an invalidation for a wave 4. So the only option you have is to count 1, 2, 3, 4, 5, right? But then look at your wave 3 and how messy this is. Your wave 3 has to then be somehow a 1, 2, 3, 4, 5, but then again 1 and 4 overlap, that's not allowed, or 1, 2, 3, 4, 5, but then again overlap. So in other words, what I'm trying to say, the probabilities here are higher that this is a corrective structure to the upside, which increases the probabilities to either continue ranging or look for the lows. Now very locally, right? We have over here had a move to the downside as price hit the resistance, and in the resistance we have two areas of interest. We have the daily at 69.3k and the daily naked point of control. Would actually be quite nice to still hit the daily naked point of control. It feels a bit left out here. We got close but no cigar, no? So we almost got there, but we found resistance at the resistance box. Very, very, very nice to see. And price moved towards the downside. Now here we then have a three-wave structure to the downside at the moment, and then we have this range. Now, if we're looking for an impulse to the downside, then we have to count a wave 1, 2, 3, 4, 5 wave move. But this wave structure is incredibly long in time now, 12 times longer than your wave 2, which reduces the probabilities that this is a wave 4 in a bigger impulsive structure. Therefore, it increases the probabilities that this structure here is either a wave 2 in a bearish scenario where you're counting a wave 1 and then a 2 and then a 3 to the downside, a wave B or a wave X, which are corrective structures where eventually you do expect price to move back towards the upside. But that depends on the reaction you then get if price is moving to the downside. Now we also hit the 886 taken from the low to the high, which increases the probabilities that sooner or later price will take out this low, and then we can observe what happens. We do have some support to the downside, which is the blue box here, sitting between a 67.6k and a 67.5k. If we then look at the CVD divergences, then we did have some bearish CVD divergences over here, right? Lower high in price, higher high on the CVD, but that already played out. And now on the chart we have some bullish CVD divergences, higher low in price, lower low on the CVD, but we did touch the 886, increasing Elliott wave probabilities to take out this low sooner or later. And also keep an eye on the 3-minute time frame here with regards to the CVD, because what you can see as price is moving to the downside is bearish CVD divergences here. For example, here you have a lower high on price but a higher high on both of the CVDs. Here you have a lower high on price, but again a higher high on the CVDs. And this is a story that repeats as price is moving to the downside. So keep an eye on every bounce and those small 3-minute bearish CVD divergences. We do have some news today, Friday, May 31st, 2:30 p.m. Central European time. We have some high impact news, so make sure you trade safe around that hour. And if we then finally look at the probabilities of the different scenarios, then on the 4-hour time frame, the probabilities are higher to either continue ranging in a WXY, after which we expect continuation to the upside, or the bearish scenario in a 1-2 looking for a 3-4-5 diagonal. And on the 15-minute time frame, the probabilities at the moment are highest to sooner or later take out this local low here as the 886 is touched, and the 886 is very rare for a wave 2 and liftoff in a wave 3, and more common for a wave B or a wave X, which means that any move towards the upside here locally has a higher probability of being a C or Y, which in turn increases probabilities to take that low sooner or later. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.